Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the macro and the short term for Bitcoin, discussing the recent consolidation and whether or not Bitcoin will continue toward the upside, what exactly needs to happen for it to do so, and the potential risk of short-term and higher timeframe corrections. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. We're going to be going over the macro charts, the weekly charts, the key technical and structural levels, the short-term price action, and of course, the total cryptocurrency market cap. If this is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our trading Telegram channel, you can join the VIP channel by clicking the pinned comment of the free channel, contacting our admin, checking out our entire trading track record, or checking out a 10-minute video showing you inside the VIP channel. You'll get access to the main VIP channel where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart education chat to the help, daily video, community setup, and news chat. Check it out. We'd love to see you in there. Let's jump into the content. So taking a look at Bitcoin over the past 24 hours, we have seen a fair amount of resilience to break through that $105,000 level. We're going to go ahead and mark that out by a horizontal ray over here. We can see we had the initial rejection from 105,000, dropping back to the 50 EMA. We saw a bounce from that 50 EMA and yet again retesting and rejecting from 105,000 yet again. The $105,000 level is a key psychological and now structural resistance, which sits just above that weekly range high. So we do know for us to see a continuation into these all-time highs, we need to see a breakout of that 105,000 level on the short term. And like we mentioned in today's video, we are going to be discussing what needs to happen for Bitcoin to do that and the probabilities behind that move. Let's start on the market data. 24-hour volume and 24-hour liquidation. Taking a look, volume is down 12%, 281 billion. Liquidations down 22%, around 300 million over here, with the majority of those coming from long positions and a small amount coming from short positions over there. Looking at the DXY has seen a rally toward the upside during this week, of course, with CPI data coming out. In fact, CPI data came out relatively bullish in comparison to the overall expectations. In fact, the forecasts and consensus were actually, the result was actually better and more bullish than what was expected for the forecast and consensus, but overall inflation was still trickling up a little bit, which is why we saw a little bit of a move toward the upside for the DXY, but then we saw that correction when that CPI data came out. So overall, not looking too shabby over here. Again, we have confirmed deviation below that range low, so if we do want to see the DXY continue toward the downside, we need to get back below that 100 level. Until then, expecting moves to the 200. Looking at the S&P 500 over here, the S&P 500 has done fantastic, guys. It broke out of that horizontal resistance at 5,700. Of course, we had that prior high over here, turned into horizontal support, lost that level of support, turned to a level of resistance. We broke through that resistance and we saw the price reach both of our targets. Target number 1 was 5,800. Target number 2 was 5,900. So we have come up now to retest our bullish targets, and therefore we are now in another level of resistance. This resistance level spans up to the point of which $5,935, essentially smack bang in the middle of that VRPV gap over here. So we can see already the price action on the daily has lost a little bit of bullish steam over here with smaller body candles. We have now actually opened up red, signifying some selling pressure is coming into the market, which could develop into a little bit of a correction over here, provided this level holds as resistance. So the overall bias now for the S&P 500 is we expect short-term corrections until proven otherwise. If the price action is able to break through 5,935, we then expect continuations up into these prior highs. We have one more resistance to clear before potentially moving back up to these highs. Until then, we are at a level of short-term resistance, similar to Bitcoin, right? Bitcoin will also need to break through a short-term resistance to see continuations into new highs. So both markets, although have moved slightly different, are at key structural levels nevertheless. Before we get into the crux of today's analysis, make sure to go ahead and sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll go to support me making this content on a daily basis, and of course you'll support yourself in your trading journey. You'll get a lifetime trading fee discount of 15%, which can build up to 45%, all based on your trading volume. And of course, you'll go ahead and trade on exchanges I use and I trust. So go ahead and check out those exchanges. We'll play a quick ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump into today's analysis. We are starting on the total cryptocurrency market and the total altcoin market, then jumping over to the short-term charts, and then discussing Bitcoin on the macro and higher time frame. First and foremost, guys, let's take a look at this chart from a structural basis, and then we'll run our technical analysis, discuss some warning signs that are popping up and what we need to be watching out for. So as we can see already, guys, the total cryptocurrency market cap is looking very good on the higher time frame. We have managed to break through not one, but two major horizontal resistances marked out by these horizontal gray boxes. We can see the prior one was at 3.19 to 3.25 resistance, as well as that POC level, which we are currently sitting above. So we know that the total cryptocurrency market cap has breached these major levels of resistance. Again, what was once a horizontal channel over here, we had that resistance on the high side, turned into future resistance yet again, which we were able to break through. Now with this, provided we are able to sustain above this horizontal level, it is expected the total cryptocurrency market cap will continue upwards into the upper level of resistance, which is sitting between 3.6 to 3.7 trillion. This upper level of resistance, an area of which we retested for numerous weeks in the late 2024 period to early 2025 period. We can see over here from December into around early February, this level was a level of major resistance. So if we are able to sustain above this 3.19 to 3.25 level, the expectation is that we do continue aggressively upwards into this next level of resistance. Now, if we are able to sustain and we do see that continuation, it is very likely Bitcoin will be as well breaking through the weekly range high and continuing to an all-time high. So we're going to be discussing some leading indicators today, which have shown historical relevance in determining continuations up on the macro and how that can be applicable to this current price structure. But in terms of the warning signs we need to be paying attention to, and this is a very important point, when we see these strong continuations, we have to assume the price will continue in the direction it is going until proven otherwise. Meaning, in essence, we are viewing this from an invalidation perspective. That means, again, we are looking for potential warning signs which may develop into corrections, but until that happens, we are remaining with the current trend. So expectations are upwards, but we need to be aware of potential things that are occurring, which may spill over into corrections. And more importantly, we need to be aware of trigger points when, if broken, will result in a reversal in the trend. So at the moment, there are two levels we are watching, or two things we are watching at the moment. Number one, we have a major uptrend on the RSI. This uptrend is taken from our absolute lows over here at around 2.4 trillion. We have our retest at this level of 2.85 trillion, the first major higher low, and we can see the uptrend dragging across. We are still above that level on the RSI. So we do have positive momentum and we are in an uptrend, so the trend is very strong. If this level were to break toward the downside, however, it is highly, highly probable that we would see the total cryptocurrency market cap deviate above this region and we will see a correction below. This would mark this as deviation above the prior range, which could result in a correction back to 3 trillion. If we see that occur with the RSI breakdown, we would see Bitcoin reject from this weekly high and create a potential failure to break through. This would be a bad sign, as it would most likely invalidate one of the weekly indicators we have, which we'll discuss in a second, but could slow down the progress for this macro trend continuing upwards. So that is something we have to be very, very cautious of. So taking a look at this again, we do have another thing we're watching, and that is going to be, we have got a red dot print on the market cipher B, okay? We can also see on my personal indicator, we have got a red arrow print. Essentially what these are suggesting, it is suggesting we have positive momentum, okay? They're not suggesting negative momentum. We can see we have positive momentum, but what this suggests is it suggests that we are starting to see exhaustion. So we are starting to see exhaustion develop. We're starting to see weakening positive momentum. If you want to put it into a phrase, it'd be weakening positive momentum. So this isn't necessarily going to be an immediate reversal sign. Sometimes it completely gets absorbed and we see the price action continuing upwards. However, it is something to be aware of, particularly if we do end up flipping this momentum toward the downside and having a momentum shift, then we have to take this a little bit more seriously for a potential correction lower. So, not trying to scare anyone, not trying to say anything, we're just simply going off the facts and the charts and the data, relating what the technicals are suggesting. The trend is strong, the momentum is positive, the price action is above key supports. Those are facts, the probabilities are upward. However, we are seeing some weakening positive momentum develop here, particularly over the last few days, with a red dot print on the market cipher B, and we are even seeing a slight bearish divergence on the daily here for the total cryptocurrency market cap. So if this exhaustion continues, we may see a negative momentum shift, which will result in a correction toward the downside, but it is only when that momentum shift occurs will we expect the price action to follow. Until then, it is relatively safe to assume continuations upwards, provided these levels are able to sustain. That moves us to the total altcoin market cap. Again, a lot is resting on the total market cap for the total altcoin market cap to rally, as you know. So we do need to see a breakout of that $940 billion level to see altcoins perform exceptionally well again. At the moment, if we break through here, the majority of altcoins are going to have that next leg up that will likely take us over 1 trillion. We'll likely see the price push over 1 trillion, which will see another 10, 15, 20% rally for the majority of altcoins. If we do not break through this region, if we sustain below here, and the total cryptocurrency market cap remains stable / moving upwards, we are just going to see rotation from one altcoin to another altcoin, from another altcoin to another altcoin, meaning some altcoins will be red, some altcoins will be green. But if we want to see the entire market go up, we need to break upwards. If we see the total cryptocurrency market cap decrease and the total altcoin market cap decrease, we will most likely see the majority of altcoins go red. Something to pay attention to. Let's move over to the short-term price action now. The short-term price action for Bitcoin, a very interesting chart. We have seen a lot of chop, and this is an okay chart. I'm not going to lie, this is okay. We're not seeing a whole heap of strength yet, but what we are seeing is we're seeing the building blocks to potentially take that next leg toward the upside. So what we are watching here is we're watching two levels. Number one, we are going to be watching from a horizontal perspective, the $105,000 level, very clearly. Number two, we are going to be watching the 50 EMA. And then our third technical level we're going to be watching is the RSI. So these are the three indicators we're going to be using to essentially derive the probabilities of directional moves. We also have the VRPV, which we can utilize to suggest surges in momentum, volatility, particularly between the the values or the spikes in the VRPV. So first and foremost, for Bitcoin to continue upwards into a new all-time high, for the total market cap to continue upwards, with Bitcoin being the majority of the market share, we need to see first and foremost the RSI break upwards. We need to see the exhaustion, okay, the decreasing momentum which has been present by the RSI as a consequence of the price action losing steam reflected. Remember, the RSI is a derivative of this. So the RSI is derived from this price action. Therefore, we can derive exhaustion from the RSI and assume that, again, the price action has been experiencing a degree of exhaustion. So, for the price action to continue upwards, we need to absorb that exhaustion, and the best way to identify that, in my opinion, is to see positive momentum shifts on the RSI. We need to see the RSI break this trend to signify we have actually absorbed this selling, we have absorbed the exhaustion, the price action will facilitate a continuation upwards. Now, whether or not that breakout will sustain or result in deviation is another question entirely. We don't know until it happens, we have to watch to see how it develops. But will we attempt to break through 105,000 again if we see the RSI breakout? It is probable. It is more probable than not, and that is something we're keeping our eyes on. Now, for the downward move, again, we're going to be watching the gap on the VRPV. This is going to be lining up with this initial low. We saw liquidity grabs below into the 50 EMA, followed by reversals back toward the upside. If the price is going to sustain underneath that low at around 102.3 and that 50 EMA, if we lose this point over here of confluence, we drop back below both of those, we'd expect a correction back down to 98,000. Now, this is a minuscule correction on the higher time frame. It's not going to make too much of a difference. It won't really impact the macro trajectory of the charts, other than the fact that if we do see this move, the probabilities of a weekly close above this 104.6 level is going to decrease for another week, and we will potentially run the risk of seeing steeper corrections. So that is something to keep in mind, again, because if we were to see this develop, this correction develop, it is likely the total cryptocurrency market cap would see the breakdown the RSI. So there's a lot of pieces of the puzzle going on all at the same time. You have to contextualize everything into one and use these charts as confluence. And that's where a lot of people get things wrong. It's all about using confluence, using a variety of different charts to come to a more educated understanding. The more information you have and the more data you have and the more information you can extract, relevant information you extract from your data, the better informed your decisions are going to be and your overall understanding of what is occurring, right? If you just use one chart and one indicator, you can only derive so much. You have no confluence, you have no way to validate that. It is going to be less valid in terms of where the price is likely to go than if you're using a variety. Now, there is something called analysis paralysis. You can use too much. It is common that new traders think more is better. More is definitely not better. It is about using what is required and using, I guess, what you could say, everything that you are using to its max potential. Because there are a variety of indicators that tell you exactly the same thing, and to a new trader, they all look different. So you assume they all mean different things. But in reality, a lot of indicators are actually telling you the same thing. A lot of price structures are just derivatives of what is happening to momentum, or vice versa. A lot of things in the charts develop and you can derive meaning from a variety of different ways. So it is not about using more indicators, it's about using the indicators you are using to a better capacity and better level. So let's take a look at this again one more time. If we do drop down, we would expect to see the total cryptocurrency market cap drop down, and of course that could potentially result in a steeper correction. If we break toward the upside, we are watching for the RSI to break, and then we are watching potential deviations or continuations. If we do see this play out, the probability that the weekly candle close will occur above that 104.5 level will increase, and thus we will likely see a macro continuation upwards. There is one more indicator I want to talk about before I close off the video. That is a 62.09 on the RSI. Historically, when we have broken through the 62.09 on the RSI, we can show you this chart over here. Actually, no, we don't have the chart up. Let's go back to our normal chart. Historically, when we've broken through this level, more times than not, we see a rally of around 10% upward. Sometimes we've seen 50. There's been instances where we've seen 70. Now, I don't think we'll see those higher numbers, but there is a chance we see a 10% rally plus from the point at which we're broken out. If we take a look at when that breakout occurred, it is going to be from this level. So from that 104 level, if you assume a 10% rally, it take us potentially into 114, maybe 115 as a target move if we break through this range high. Thank you for tuning in. Have a fantastic rest of your day. I'll catch you guys in tomorrow's video. I'd love to see you then. Bye.